Hey, cannabis traders and investors, another week has concluded. We're going to look at the charts here, see where we stand. We're going to look at the S&P 500 for a bit of comparison. And we've got more dangling carrots, which everybody in the sector loves. And I just mean the fact that we keep getting rumors and info, and we're hopeful that we're going to get something with regards to the SAFE Act before the end of the month. And whether or not that happens, we are seeing the market, in my opinion, position for it. Those that follow the sector closely are doing some anticipatory buying. And we have different, I forget who exactly it was, but some firm came out and said 70% chance we see it happen in the lame duck session. I personally, I'm watching for it, but I'm not doing any trading based around this assumption. And those who have been following the sector for the last 2 years know why. And it's because we've heard this over and over and over and over again. And one of these times it will be true, absolutely, but it's not a profitable trading strategy to be trading just around that possibility. If you're combining it with technical analysis and key support levels and mitigating your risk or accurately assessing your risk and placing stop losses, that's perfectly fine. But we've just heard this so many times. Anybody that's been following cannabis the last year and a half has got to be so sick with the structure of politics in the US. And I know for me in 2010, when I started my journey into this sector, that was the first takeaway is, wow, this is really how we do it? This is insane. Yet here we are. So let's look at the charts. Again, keeping an eye out for news. For me, the thing that I always think about is this news that the people that have been following the sector will care about? Yes. Is this news that the general population of the United States is going to care about? Maybe not. I'm not sure. It's not the sexy headline of Biden pardons cannabis, whatever. That's a headline that gets a ton of attention, and the people that don't follow the sector really care about that headline. The people that follow the sector say, well, that headline doesn't really help us very much. But again, just be aware that, we get tax benefits on these companies. Yes, it's going to impact the bottom line. Yes, we will likely see some bullish price action from that. But in terms of, looking for it to catch on social media and for Wall Street bets and Twitter to be all over it, I'm not so sure this is going to be the kind of the headline that gets that. But I always take it one day at a time, and we'll have to see. Because if the volume shows up, we will very quickly know that this move has followed through or not. So the S&P 500 tested the high of this entire move, which is the highest level that it has seen in the last 2.5 months almost, which is notable. We're holding strong. And for me, it's just all about these higher lows. Ever since the CPI reaction, we've got a higher low, another little higher low. This red line here is the exponential moving average, the 12 period. I use it a lot in my trading on all different time frames. And I used it today as a short term. That's irrelevant. I use it all the time on all different time frames. And so we can say if daily EMA 12 continues to hold, the bulls keep control, because that's going to ensure that the higher lows of an uptrend keep forming. If you lose this ascending red line, then obviously that's the first crack in the armor of the bulls showing some weakness. But for now, we're testing the high. And of course, the bulls first thing next week want to see fresh highs and look up at 41.58 as the next key level to try and keep this move going. In the current broader market environment, what we've been seeing is big tech really holding things back. Big tech are the weakest names right now. Apple, Amazon, they're weak. And so we're seeing some strength in healthcare and in the financial sector and in the energy sector. And growth names have been weaker as well. And I put cannabis in growth names because it's really high risk, high reward. And obviously there's the potential for that growth. So other names that I look at for growth are ARKK. Whenever I'm gauging things, and you can see we're near our fear lows. And PLTR is another potential growth name near the fear lows. The biotech sector, XBI, I view them as growth. We've been sideways for a bunch of months. And IWM to a certain degree, but keeping in mind that IWM's largest holdings in terms of sectors is the financial sector. So it's made up of a ton of small companies, but the financial sector is the most important. So it is being bullishly impacted by the fact that the financial sector is strong. So that's a whole lot of information that some of you don't care about, but just a gauge of where there's confidence or not. And right now it's not in growth names. And so the fact that the cannabis names have been holding on pretty well is a bullish sign. And we look at CGC. The last video I did over the weekend, I talked about how the bears were starting to gain a little bit of confidence because of the pullback. We started the week with more red. And again, whenever I look at relative strength and relative weakness, I want to know what's the stock market doing, the S&P 500, and how is this sector trading compared to it. And so we started to the week on the 21st and the 22nd. This is what the S&P 500 did on the 21st and 22nd, pretty much flat and then a solid green day on the 22nd. And that was the bull showing us we've still got control. And so CGC those 2 days was red and then redder. So it was going in the exact opposite direction. That's showing us very clear relative weakness comparative to the broader market. So now we have a daily bounce underway and we broke the pattern of clear pullback. The way that I'm viewing this bounce right now is pretty much the low, a base of support established at 298. We're looking for another higher low. It's now set at 337. But the size of this pullback, unless there is news help, in my opinion, is going to form a daily lower high as the most likely scenario, anything under 456. We can go 20% from here and still be under that 456 level. And the only way that you're going to break, what happened here? Well, there was earnings as a factor, but it was the increasing bull volume. The only way you're going to pull back that much and be able to see straight up continuation is with really high volume pushing forward. And of course, news can bring in that really high volume. But in the absence of that really high volume, we're going to look for a lower high to be the most likely result of this bounce. And as a technical analyst and trader, I use the hourly uptrend to help pinpoint that. The loss of the hourly uptrend of higher lows and higher highs indicates that the daily lower high is taking shape. So to start next week, Monday, Tuesday, I'm going to be zoomed in on the CGC hourly chart and watching for signs, watching for the potential formation of bearish patterns, whether it's a head and shoulders or a rising wedge. And that's how I try and pinpoint a daily lower high. US cannabis is holding on a little bit stronger over the last week and a half, 2 weeks. And we'll look at that in just a second. So one other possibility is that I go long MSOS and I look short on CGC to try and find that daily lower high. And perhaps in an ideal world, I can long the stronger name and short the weaker name and be positioned really well for however it shakes out. But one thing is for sure, I am scouting a daily lower high to be the result of this bounce on CGC. TLRY is the same deal. It's bounced for a couple more days here, but this is a potential head and shoulders. What a head and shoulders pattern is an uptrend of higher lows and higher highs, changing to a pattern of lower highs and lower lows. So here you go. I just drew all the higher lows and higher highs on the way up. And so it's higher low, higher high, higher low, lower high, lower low. It's just a reversal. It's a pattern showing an uptrend, changing to a downtrend. So that's something we're watching for and keeping an eye out for. There's a support level here at 358. We bounced off of 359. That's a double bottom by 1 penny. So I'm going to be zoomed in, watching volume. If I see increasing bull volume and news, I'm going to know back off, don't look short. But in the absence of it, we just had a pattern of a lower high every single day for 5 days. Now we've got a pattern of a higher low. How long do the bulls keep up the pattern of higher lows? I look for signs that the bulls are tiring. I look to short for a daily lower high. And we'll see if I get a setup that I like for that bearish entry. Bigger picture, a bull break over 452, which can happen. We can, there's many different ways this can play out. We could confirm a daily downtrend. What does that mean? That means zoom out and scout a weekly higher low, because anything above 265 is a weekly higher low with plenty of space. And this is an inverse head and shoulders where it's a downtrend trying to change to an uptrend. So I always stay one time frame at a time, zoomed in for clarity or zoomed out wherever the clarity is. And then once that clarity is lost, then I look to the different time frames. So I'm on the daily, scouting the lower high, knowing that a weekly higher low will be the most likely result of the next consolidation that we see. And we are pretty close to bulls. If we can get over 452, that's a notable longer term break. Bulls right now in this sector are basing out and building a base of support that obviously they hope results in a reversal. It's the scales of supply of shares significantly outweighing demand. The scales are trying to balance out, and then they need to tilt for demand to exceed supply. Cron, nice tightening daily range. Cron got a little tricky where this is how I'm viewing this. The high, low, lower high, higher low, lower high, higher low. So just an equilibrium, tightening range. And then you look at this and say, well, didn't we break? This was a gap up open that market makers, in pre-market on low volume, market makers can skew the way the charts look. They can skew indicators because these indicators are based off of these candles and how we close and how we open and things like that. So this gap up open on Cron, if you look at peers on that day, did we gap up open? No, we didn't have anything near that same setup. So it was unique. And if you look at the OTC names that don't have pre-market volume and that are dictated by the market makers where we're going to open, they do this too. I mean, look at this trading day from yesterday or the 23rd, 2 days ago. It's just we didn't open down there. I mean, we did, but no shares fill down at that level. This is the 1 minute candle. This is market makers skewing how the daily candle shows up. This is why I really don't like trading OTC, because these kinds of shenanigans take place. You can't do that on Apple. If you were going to make the candle look like that on Apple, it would cost you hundreds of millions of dollars to get the price to that level right at the open and then buy the price right back up within 1 minute. So that's my issue with the OTC. But we can see it happened on Cron as well. So just venting my frustrations. But it did not take much volume for that to happen. And again, these are just little intricate games where, unless you're doing this full time, who cares? But this is how much dollar volume it cost pre-market. It cost about 5,000 shares, so about $15,000 to open the price at 322. And what happened right at the open? Someone then unloads a significant amount of shares into the bid. And so if it costs you $15,000 to open the price at 322, but then in that first 1 minute candle, you can sell 50,000 shares for $150,000, all above the price that we were at 2 minutes ago pre-market, that's obviously worthwhile. And that happens. Not saying that happened there, but that kind of maneuvering and pre-market positioning, it happens in the stock market. And it's just part of the games. So Cron is tightening up. And I need to see a bull break of 317 and 322 for this to be a clear tightening range bull break. But again, it's just a really nice tightening pattern. And you look at the longer term time frame, and we're just building a base of support. For months and months, we dropped. Demand was non-existent. Supply was significantly outweighing demand. And we have been leveling out and trading sideways for 5 months at this point. Look at these EMAs, these 12 and 26 EMA, which is also the same as the MACD. So this is pretty much the MACD overlaid on my chart. But we crossed bear. We've been bear for many, many months. And now that we're leveling out, they're trying to cross bull. And that's just pretty much showing the scales trying to flip. So we've got to get over these longer term lower highs to open things up a bit. And an example, look at IIPR. IIPR just did this on a shorter term time frame. But this daily chart is pretty much Cron's weekly chart, right? So what is happening, or what happened for IIPR, bears in complete control. Supply significantly outweighing demand of shares. We drop massively from the all-time high all the way down 68%. We then trade range bound and sideways. 86, 87, 85. This is finding fair value. This is finding a value that both bidders and sellers are content with the price in this range. And we then hold that support time and time and time again. And then finally the scales tilt. And it was the same tightening range. So this doesn't mean Cron's going to break bull, but we can very clearly see this is a setup that we can potentially break bull from and look for follow through. And so here we had this tightening range, and the bull break happened all in one day. We broke 1, 2, 3 resistances on this day. And what that does is gives conviction. You don't break one resistance and pull back and then everybody's unsure. Is it a break? Is it a fake out? You take out all 3 and it is a break. And bulls follow through very significantly from there. That's 15% of upside, even if you buy the last resistance breaking. So 15 to 20%. Resulting, and here we are at the high of this move. We're not done yet. And if the S&P 500 heads higher, then IIPR is going to head higher as well. But just an example of that leveling out. Now we zoom out for IIPR, and we know a monthly low or high is the most likely result of this bounce. If this is going to be a long-term V bottom being set, we will have to top out on the monthly bounce wherever we're going to, and then confirm a monthly higher low and higher high, because we had a solid monthly uptrend, and then we lost it with this little bear flag. Now we're in a monthly downtrend. So the monthly downtrend has to go back to a monthly uptrend, but this is a nice bounce off those lows. And there's a lot of other cannabis names that are looking at IIPR and saying, I hope my chart does that. MSOS being one of them. It's not the same kind of balance because we had all this volatility with Biden and his announcement and all that, but it's fairly similar. Again, you look at the weekly chart and it's just all bears to leveling out. And so now the bulls need to go on offense by breaking 1241 and then the Biden high of 1313. We pulled back on the daily. So we started this week with daily consolidation underway. We set a daily higher low. The daily higher low was set by an inside bar where the range fits completely within the range of the previous candle and then a bull break. That pretty much tells me an hourly trend change has taken place on the zoomed in timeframes. So our new key support is 1115. If we fail 1241 and break 1115, it's a huge red flag for the bulls. That's our line in the sand. And we need to keep those lines in the sand moving up in an uptrend. Every support level needs to be a higher low to create a stair step on the way up. 1241 is key resistance. We also have the ETF now has a lot of cash. There were a lot of inflows yesterday. And when there's a lot of cash, we generally see some buying at the end of the day of the individual names, which help prop up the ETF. And so as a rule of thumb, you want the ETF to have $20 million plus. I think they've got around 20 million right now. It might be like 16, 18 million. But when they've got no cash, you can perceive that they don't have, and there's not going to be, any end of the day buying pressure helping these individual names hold up. And when you do have cash, you got traders and investors, mostly traders. You got traders that know that. And so they say, okay, well, I'm going to buy some. And so that's what myself and many other traders do. I did it today. It didn't result in much because I don't think they did any buying, but I bought into the end of the day, and you'll see that the traders it's a self-fulfilling prophecy to a certain degree, because if we expect there might be end of the day buying, and then we buy, 230, and then the price just ticks up a little bit. And sometimes, yesterday this is some of that inflow of shares being sold, and then the massive spike up when the ETF started doing the buying or did a bunch of buying of the individual names. But it's just a trade. It's a trade where I made an entry at 1209 and I sell a tiny bit at 1215 just in case we dump and there's no buying at the end of the day. Now my break even is, low 12s. I stick a stop at break even and we either pop or I just can sell it at the end. And today it was a non-event, but it ended up being, Thanksgiving dinner paid for. So traders look to the amount of cash the ETF has and it influences it. Anyways, it's just something to be keeping an eye on. Bulls want there to be cash to know that there's some future buying is going to take place. But in the end, it's all about 1241. And we're either going to break 1241 first thing next week, or we're going to fail to break it, 1241. I might have just said 31. We're going to fail to break it, and then we'll look for a higher low in a tightening range, because the size of this bounce off of 1115 support is already fairly impressive. So we've created some space where even if we don't break resistance the first test, it's not a huge red flag, again, unless 1115 breaks. And then it's all about 1313 and 1382, but one step at a time. TCNNF with its ugly candle. I mean, it's a great candle if you're a bull, but it's a fake candle for me. Just fake in how it opened and shaped up. Anyways, we got the Biden high. It's all about 1350. We have to break that level, and then it's 1520. GTBIF, potential little cup and handle pattern. Just the psychology here of a resistance line, a rounded bottom. You fail to break resistance. The right side has to be lower than the left. And then you bull flag, and we got to break both of those levels to confirm the cup and handle. So the simple statement is, if 1229 support holds, it's a potential cup and handle. If that level were to break, red flag for the bulls, momentum being lost. But if I want to be an aggressive bull, again, like how do I use technical analysis? Some of you think it's predicting. I'm not attempting to predict anything. I can establish a trade game plan off this information. I can make an entry at 13. I can place my stop under 12.29. I can be risking 70 cents. And the reward from 13, if we confirm this pattern, we're going to be looking 15 plus. So my potential reward is over $2 and my risk is 70 cents. So that's what technical analysis is. It's positioning myself in scenarios where my reward is multiple times more than my risk. And I look for higher probability scenarios. So there's a potential support to play off of on GTBIF, and it's closer. MSOS's support is now a ways away, a whole dollar to the downside, whereas GTBIF is still fairly close to that 12.29. I guess they're roughly the same percentage, but Curaleaf, recent high of 706. We've already cleared the Biden high. And again, it's just a question of, do we form a lower high compared to 706 and tighten up within this daily range, or can the bulls break resistance this coming week? The S&P 500 can break out here. And if we get over this double top and start the week strong, that can help this sector, obviously, but something we're watching closely every day. CRLBF still range bound. And one of the weaker names, just because we haven't broken daily lower highs in the last month, and all these other names did. So sideways, volatility coming. Psychedelic name, CMPS keeps tightening up very nicely. Again, these equilibriums are all over. Low, high, higher low, lower high, higher low. So this is a trade that some TheChartGuys members took. I personally did not, but we were in hourly oversold conditions. So we were oversold, heading to a key daily support of 896 and 886. And so some bulls made some entries, anticipating a daily higher low and a continued tightening range. Your stop is if 896 breaks, because that tells you you're wrong. And the bounce off of that low was 18%. So now we're watching for the potential that a lower high is quickly being set. If we have a red day on Monday, it'll be all about 910 support and 1082 resistance. But we know that within the next 2 weeks, volatility is coming to CMPS. That is how these equilibriums resolve themselves. Look at what happened last time. This is not an exactly the same pattern, but very similar, tightening up. And when the break took place, huge amount of follow through. And the volume and the volatility showed up. So we're watching for similar. It can break either way, but it's tightening up. MNMD has not confirmed a daily uptrend in many months. We must break 310 to have the first daily uptrend. Anything under it is just a lower high in a continued tightening range. And ATAI also sideways here. 365 is the most important level for me. It's a double top. And if we don't break 365, we can easily keep trading within this range for a while. But CMPS is likely going to see a volatility break first, just because its range is tightening up more significantly. So I really like the CMPS setup to know that we're watching for volatility to come. I like the fact that MSOS is tightening up, the longer term tightening cron pattern, scouting daily lower highs in TLRY and CGC because of the magnitude of their pullback. Definitely any shorts have to use clear stop losses in case there is news that drops and we get a mini short squeeze. And other than that, we will see where we stand next week. I appreciate you watching. Happy Thanksgiving. Do good things. Have a great day.